We can focus on these top-down numbers from the Labor Department, this time a way too hot producer price index, and before that, a cooler consumer price index. Or we can look at the boots-on-the-ground stories from individual companies. The anecdotal side suggests that there have been some layoffs, 25,000 at Intel, 15,000 at Microsoft, but nothing else that comes close. Now, Intel's problems are well documented, although they actually may be able to solve them if the government does take a stake in the company. That would be terrific. You know why? Because its balance sheet is really in tatters. Intel needs the money. The government has it. It would be fabulous. And I think Microsoft's been up front, and there are others that will be turned out to be sizable, too. Even though today's producer price index number was way too high, wage inflation is the real battleground. And I think the battle is being won by the machines. For example, this morning we spoke to Chuck Robbins, CEO of Cisco, Amazon squawk on the street, and he spent a great deal of time talking about a word called that was agentics. agentics. Get used to that word. For many CEOs, agentics is a code word for we can do it without humans because humans are costly, they get sick, they need health care, and then they quit. Here's how I see it. Companies are stalling when it comes to hiring because people are expensive if even costs money to fire people. There's nothing you can do about it. Meanwhile, it's easy to digitize, and it can save you a fortune. So why not wait to see what else can be agentic? One of the hotter areas of the PPI was the warehouse. I found that anecdotally to be hard to believe. Right now, FedEx has a gigantic warehouse that employs only a handful of people. It's just filled with robots. Amazon's got gigantic people-free warehouses that have brought the price of delivery down dramatically. It's all part of their considered effort to consistently offer same-day delivery for groceries, something they plan to offer in 2,300 cities by the end of this year. Given that you can get same-day delivery for free with Amazon Prime, but you have to wonder, what does that mean for DoorDash or Instacart? Could there be layoffs there? Oh, and what does it mean for Kroger or for the small food selections at the drugstore or at the troubled food offerings at Target? It's one thing to skip the trip to Walgreens by getting your shaving cream or toothpaste from Amazon, but food? How can you possibly not order from Amazon if you're a Target food shopper? Don't forget, you're buying food from Whole Foods. I think this is the stuff of inflation, not trucking prices, not diesel. Two of the biggest outliers to the upside in this morning's report that are going to reverse anyway, and that inflation is going to go down. Meanwhile, layoffs will be coming very soon at a host of banks, which is one of the reasons why they're so hot. Capital One won't need all the money, all those people who work at Discover. They now have two credit card companies under one roof. Some of the compliance people at Wells Fargo will need new jobs now that the regulatory noose is loosening. Mergers have always been a major source of layoffs, and we've already seen way more deals this year than last year. Actually, it's going to be the last 4 years because the Biden era's de facto ban on M&A activity is now over. However, going forward, I think the biggest contributor to wage deflation will be from law firms, accounting firms, and advertising firms. These organizations are hesitant to fire tons of people at the moment, but they are also reluctant to hire as many people. They don't want to hire that many people because they know AI is coming for the jobs. Now, some of these numbers are closely guarded. I only know law from a senior partner who oversees hiring and is constantly checking out the competition to find out the scoop of what's happening in the industry. Yes, it's slowing. But what they're really watching is how many third and fourth year associates can be laid off once the partners get used to seeing the gains AI may have to offer them. One of the reasons I want the monthly non-farm payroll tabulations in private tech hands is that it seems like there are plenty of tech companies that can model hiring and layoffs much better than just calling around, which is very 1960s. I bet we'd be shocked by how many people are not being hired, especially in warehouse and white collar. I understand why everyone's worried about inflation when the tariffs will likely force many companies to raise prices. But I think this is a moment of powerful wage deflation. And that's what will ultimately matter. It's not obvious yet. It soon will be. Don't wait for the figures. Just accept that wage deflation is a given, and it won't be long before we all see the shocking results. I like to say there's always bull market somewhere. I promise I'll find it just for you right here on Mad Money. I'm Jim Cramer. See you tomorrow.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.